Welcome to Mortgage Masterminds. I'm Richard Greaser, VP of Marketing at Sales Boomerang, and my guest today is Vice President and Branch Manager at Norcom Mortgage, Chris Mitchell. Thank you very much for joining me. And how you doing?
Good. Thanks for having me.
Cool. Hey, listen, I want to kick this off with a story. I just listened to a podcast from Housing Wire. One of their, I don't know his actual title, but Logan Motashemi is kind of their like big analyst. And one of the stats that he was talking about on this podcast and what he was focusing on was that median days on the market are at all-time lows. And this is in a situation where all of us know like the mortgage industry is hurting. But this is different. Like this kind of speaks different to that, right? It still shows that median days on market for listings are at all-time lows. 82% of all homes being sold in under a month. Right? That's happening right now in the country at a time where a lot of mortgage lenders are hurting. So that says to me, that's the demand supply issue that everybody's kind of talking about. There's just not enough homes, not enough home listings, right? And so are you seeing that right now when in your conversations do you still have like a lot of buyers who just can't find homes?
Yeah, absolutely. That's been going on here in Florida since, probably started mid-2020, a few months into the COVID situation. That situation started here in Florida, probably more so than elsewhere where I'm licensed and where my team works. What we've seen is that I believe Florida is gaining something like, I've seen various estimates, somewhere between 1,000 and 3,000 people per day move into the state of Florida from elsewhere in the United States. So we're gaining population at a rapid pace. And what's fueling it is people moving from the high cost northern markets. So New York City, Philadelphia, Boston, Chicago, to a lesser extent, Detroit and California, coming here. So they're selling out up there and they're coming down here with bags of cash, right? So they come down here to South Florida and they come into my market, Delray Beach, and they look at a house that's, $400,000 or $500,000 and they say, wow, that's a deal I'll take too. So yeah, the sales market is still hot down here, and it's been fueled by cash all along. So the challenge for us in the mortgage business has been, I've got a pipeline that's a little weak, but I've got a prospects file that's filled with hundreds of people who are pre-qualified to buy, and there's nothing for them to buy. So the question then becomes, what do we do with all those folks? Because they all still want to move here, right? Rents are going up astronomically, right? We're seeing some places down here in this county where the local cities are actually passing laws to regulate rent increases because it's getting so extreme. 30, 40, 50% year over year increases on rent because of all those people coming in who are looking for a place to live. So the question is, how do we one, address that and make it an opportunity as opposed to a problem for us, right?
Yeah. So what's interesting is obviously about all the rate hikes, you're feeling it right now. And that was to try and kind of curb a lot of this. But I mean, are home prices coming down right now in Florida? Is that working? I mean,
not here. I mean, this, we're at the northern edge of the Miami market. This is still the hottest spot in the country. We've got a couple zip codes in this county that are apparently the most desirable places for people to move to, such as Palm Beach Gardens, Boca Raton. The city of Boca Raton is just which is 100 feet south of my office. It's just absolutely booming. Delray Beach is another one where we've seen a population explosion. We're over, I think we're up to about 69 or 70,000 people here. We were at 40 something a few years ago.
Wow.
So yeah, we're still feeling it. I'm very happy to welcome all my new neighbors down here. I came from the north too, so I get it.
Hey, we were just talking about me maybe moving down to Florida, right?
Yeah, exactly. DC's another one where they even have a city tax there, don't they?
Yep.
Crazy. We've no taxes here in Florida. So
yeah, very different. But I heard that they try to make up for it in some form of property tax in Florida. Is that true?
They do, but nonetheless, here, say a $500,000 house in this area, the taxes are going to be, somewhere between $5,000 and $7,000 a year. Whereas in the market where I'm from, in the New York City suburbs, the taxes on that kind of a house would be 25,000,
Wow.
and you
Yeah.
pay a state income tax.
Yep. Yeah. Okay. Very different game in the New
Different
York
game.
area. Well, so this is great. I appreciate you just kind of kicking it off with me. But why don't you just take a second, get just a minute, tell us a little bit about you, how your career, how you ended up at Norcom, if you don't mind, and a little bit about Norcom and your experience there.
Sure. So I actually come from the real estate brokerage side. I was a real estate agent in Manhattan for about 10 years, and moved into brokerage management both in New York City and in the suburbs. I actually founded and started and founded a brokerage in Manhattan, specializing in condos in the Chelsea market, as well as the financial district, which is where I did the majority of my work. I actually started in real estate in the financial district, selling condos for developers, a lot of office building conversions. So did some pretty high volume deals there, and then eventually moved into managing brokerage. Worked in the Westchester market for the largest brokerage in Westchester, both managing resale and also working with new development. So I've been involved with new development and construction for pretty much the entire time I've been involved in real estate. I happen to really like new construction. I dig it. I understand it. And I always feel that, if you have the choice between a used home or a new one, wouldn't you rather have a new one? Just like if you're buying a car, wouldn't you have a brand new car over a used one? I don't buy used cars. I totally get it. I mean, yeah, is it more expensive? Sure. But it's a choice. Life brought me down to Florida a few years ago, and I actually decided to try out my hand in the lending business. So I started as a loan officer at probably the largest non-bank lender in the country, definitely the largest in Florida, and was pretty successful there, and was recruited over to Norcom to open up a branch. And what attracted me to Norcom was the kind of small, agile size of the company, as well as some of the specialty products that we offer. So at the big lender, one of the things that we wouldn't touch was renovation and construction. Here at Norcom, we have a dedicated team for doing that. So we literally have a whole department dedicated to reno. And reno is, I think, a huge opportunity in a market that's very tight, right? So if you can do a renovation purchase loan, that means that you can create your own inventory, right? So you can go find that diamond in the rough house that's most people would look at and say, no, I don't think so. I don't want that. That kitchen's from 1970. It needs a new roof, and the windows are those old jealousy windows, those slatted things we have here in Florida. I need to replace all those. I don't want that house. So with a reno loan, you can go in and look at that, and not only buy the house, but also fund the repairs and the upgrades to make it exactly the home of your dreams. So you create your own inventory, you face less competition, and you're going to get the deal. So that's something we do that I was really attracted to. We also do construction loans. I actually piloted a program here doing a Fannie Mae single close construction to permanent loan. So what we actually do is if you want to build your own house from the ground up, awesome opportunity. We will work with you to get that done. So you have one closing. We lock your rate today. You have approximately a year to build the house, or rather your licensed contractor does. And then the loan automatically converts to a 30-year fixed rate mortgage. In the rising rate environment, one of the great features of that is we lock in today's rates for a loan that's actually really going to close a year from now. If the market were to change, the product will automatically float down to the market rate. So there's no risk to the home buyer to build their own house with that product. So I was really interested in that. And then the other thing that we do here at Norcom that's different than a lot of other lenders is we have a department focused on reverse mortgages. Reverse mortgages are traditionally for folks who are over 62. And they're traditionally limited to single family homes because most lenders only sell an FHA product. So in order for a condo to use it, it would have to be an FHA approved condo. And here in Florida, almost none of them are. So we actually have a different approach to it. We work with various different investors, and we can actually go 55 and older, and we can do condos all day long on reverse mortgages, which can also be used for a purchase. So somebody over 55 could say purchase a home that's more appropriate for their lifestyle and never have a mortgage payment.
That's amazing. Wow. That is amazing. I didn't realize that that was even possible. So our company, our company, Sales Boomerang, offers a reverse mortgage intelligence, and so it's as soon as people hit the criteria that they're eligible or could possibly be in the need for a reverse mortgage, it's like a piece of intelligence. You get it in your inbox, and someone follows up. But it's by the legal requirement for reverse mortgages. It sounds like you're doing it earlier. Like 55 is earlier than typically is.
Yeah, so
Right?
the FHA backed product, which is called the Home Equity Conversion Mortgage or HECM,
Yeah.
that's a 62 and older product.
Yeah.
We have
Yeah.
investors that we work with that have non FHA backed products that are equally good, if not better, and they start at 55. So all the products we sell, they're all non recourse, meaning there's never a chance of losing your home so long as you pay your insurance and your taxes. No chance of losing your home to the bank. Just like in a normal mortgage, you always have to pay your taxes. The one thing is that in a reverse, we can't escrow them because there's no payment.
Yep, makes sense. Yeah, we're doing a presentation. I don't know if you know Dave from Mortgage Coach, or you know Alex Kosichin from Sales Boomerang, but we're doing with Wendy Lee from the Blackfin Group, and we're bringing Tim from Be Smarty, and it's a big presentation from industry heads all about retirement and the dire state that the country's in. And I was just in the researching for the building the presentation, I was finding out that it's really scary. It's really scary, right? What's coming down the line. Like, I think 1/3 of Social Security is going away by 2030, 2035, something like that. The average retiree right now has about $100,000 in home equity that they can tap into, between 100 and 175. And most, I think it's 65 plus, are living on an annual income of about 38K on average, right? That's their annual income, 38K. And so that equity in their home can give them an extra $800, $1,000 a month in income, and that's a big deal, right? A really big portion of, I mean, that's like 25%, 30% of their monthly income could be coming from the equity they have saved up in their home. And so, those reverse mortgages, it's not just like a small segment. It's a huge growing segment for a lot of lenders. I'm sure, like yourself, that really focus on that. It's awesome. I love seeing that folks like you are coming up with innovative ways to help folks who are like 55, because that segment is really in a hard place right now in the country.
Yeah, it's a huge opportunity, and I believe that we think we're addressing maybe 5% of the available market for reverse products. So I mean we're not even making headway yet, and this is something that this actually is not a new product. This is I think the legislation for it dates back to, I want to say, 1982, which actually means it's older than I am. This is Ronald Reagan era legislation that was designed to primarily to help people stay in their home if they desire to age in place, as opposed to having to be placed in a professional care facility, which a lot of people would prefer to do that. I saw it with my grandparents that they didn't really want to go into assisted living situations. They wanted to stay at home. And for the majority of Americans who unfortunately don't have significant assets other than their primary residence, this is a way to one, keep them in their house and fund it. And it's also, it's backed by, in the case of the HECM loan, it's backed by the federal government, because it's less of a cost to society to keep them at home where they would prefer to be, rather than institutionalized our elderly folks, which nobody wants to do that. But the other great provision of it that most people don't understand or don't know is that you can use it to purchase a home that's more appropriate for your life. I'll give you an example. My parents are in their 70s, and they are going to be moving to a home that has no stairs, which is a great idea.
Yeah.
That's the number one issue with older folks staying at home is a fall risk, right? That's obvious. And stairs are a huge issue. So moving into communities that are designed for that lifestyle is a great opportunity. And using a reverse product to do it, could be a really great idea. Not to mention, there are a lot of tax advantages to using a reverse mortgage as opposed to, say, liquidating 401k savings, which is going to be taxable when you take that money out.
Yeah, for sure. I mean, you got to be a really good mortgage advisor to be able to talk to someone like that and their family and really advise them on their options, because you're talking about like a move down, right? That's what you're talking about, right? A move down from, say, a bigger home to a one level home where there's no stairs. And then showing that with this reverse mortgage, you never know. The family might want some of that money that's in the home, and they might have hesitation with getting, doing a reverse mortgage and losing the equity that they think is their retirement. It can get tricky, and there can be a lot of emotions involved in those kind of discussions, I'm sure.
Yeah, and that's why we train all of our loan officers who work in reverse mortgage to get the family involved early on, right? So if there are adult children involved in the situation, get them in the conversation early on. Before we go down the road of all of these products require a counseling session with a HUD approved counselor. But even before we get to that, we should make sure we have buy-in and understanding from the whole family. Because it will potentially have an impact on inheritance. It could.
So let's just do just so I get an understanding. Do you have? Are you comfortable giving kind of your annual production numbers, something like that, so people understand kind of what you're doing, and maybe a breakdown between your reverse business and your purchase business, and obviously refi is pretty dried up at this point for most folks, but it'll come back.
Yeah, I mean, I'll speak broadly about it. This is a fairly new branch. We've been open for about a year. So our production is increasing, despite the fact the market is not great for most people in the industry. We're actually having a good year. I just hired 2 brand new loan officers to work here. One experienced and one brand new. So we're continuing to grow our business. We're still, the vast majority of our production is coming from forward loans, meaning the normal kind. My product mix is more than 50% government, meaning FHA and VA, mostly FHA. We're doing, I'd say we're well over 95% purchase rather than refi.
And how many, would you, just in general, how many reverse mortgages do you do in a given month?
Not very many. I mean, we try to do 1 or 2 a month. It's a huge opportunity. It's also the hardest kind of deal for us to source. The places where the leads come from on reverse are completely different than where they come from on purchases.
Can you talk a little bit about that?
Yeah. So in the forward world, which is where we spend most of our time, right? Purchases come from obviously your personal sphere of influence, like always, but largely from getting in with realtors who are clearly our partners in this. That's a huge thing for us to do, is to make sure we know the realtors in our local markets, that we add value to them. And that they, feel comfortable referring business to us. The way that I built that, one, having been a real estate agent for as long as I was, I knew, I kind of know the lingo, and I know the business and how it works. My best referring realtor came to me through a deal that I did with someone who was actually buying a house that she served as a property manager for, and the guy had terrible credit, but he made good money. And what she said to me was, she said, if you can get this guy closed, I'm going to refer you all of my business. And in the first, I did get him closed. He had a 583 score and no money in the bank, and had 7 different people giving him gifts to get to the closing table.
Did you have to work with him to get his credit up?
I did. Yeah. I mean, he started in like the 540s, and we got him to 583, which was, just over the line. And we got him closed, and that realtor referred me 8 more deals within the first year.
Awesome.
So That's
Yeah, I
pretty
mean,
much
there's
what it takes.
a lot of loan officers will take a look at an opportunity like that and be like, "Sorry, I can't help you." You know what I
Yeah.
mean? You go work on your credit and come back. Whereas you're actually like getting involved and saying, "I can help you here. Let's work on building your credit back up together." That's awesome. And the realtor is probably thinking, "Yeah, man, if this person's going to do this for me, I'm going to give all my deals to them because they're going to go the extra mile every time."
Pretty much. I mean, that's that's the basic thing to do. Then on top of that, here at Norcom, we do a lot of things to support realtors, right? One of the things we do is we have a service that we call the listing launcher. So if one of our realtor partners has a new listing, they just simply give us the NMLS number, and our marketing team up in Connecticut puts together a little website for it and blasts it out to social media. And the last one that I did for a realtor down here in Lake Worth, Florida, we had 3,325 views on the property just based on our marketing in a 3-day period. And she did get an appointment to show the house, and she did get an offer out of that. Now,
Awesome.
in that case, we didn't get a mortgage on that deal, but our realtor got a good buyer out of it. And that's well worth it, because I can tell you that realtor is thrilled with what we did for her for zero cost.
Yeah.
So I know that my name goes out to everyone that she talks to, and I know that our branch phone number and information is on every one of her flyers at every one of her listings.
Amazing. I love that. And they're probably loyal to you too every time that she gets an opportunity to come her way, or
Yep.
right? I mean, so what's really interesting to me is our company is one of the only ones that actually I've seen that actually enables like a loan officer to give back to a realtor. Usually it's this, right? It's like, "Hey, I want a deal. Give me a deal." From loan officers asking realtors, and promising all the different reasons why they would want that. Our company, every single time that a loan officer gets a piece of intelligence, someone listed their homes for sale, you can literally give that back to the realtor, right? "Hey, did you know that someone just listed their homes for sale, and that this person you worked with before, you sold them this home, or you spoke with them." And those really work really well, right? Because then you get that realtor completely loyal to you because you're telling them every single time. Now, when it's a credit related piece of intelligence, you can't really, you got to do it the right way. You just have to say like, "Hey, now's a good time for you to reach out to this person," right? If it's a credit related, like a mortgage inquiry or something like that, someone just applied for a mortgage or something like that. But it's amazing to see someone like yourself who's got something that's working where you're giving back to the realtor also. In another way, there's just not many ways that loan officers can do that, right?
Sure. Yeah, we do that too. I mean, even at the big lender I worked for, we had the system where if a customer requested a payoff on a loan, it notified the original loan officer who did the loan. It was intended as a tool to recapture a refi. But what I found very quickly, I always call them. Any lead that comes in front of my face, I'm going to call them immediately. I don't care who it is. I don't care what it was. I'm just going to call them and see if I can make something happen. But a lot of times those calls are not actually, they're not a refi. It's, "Hey, I just had a baby. I need a bigger house. I need to move. So I wanted to see how much it costs to pay this thing off, so I know how much I can spend on my next one," which is a great chance for a conversation to turn that borrower back into a borrower again on a purchase deal, which is always better than a refi. And then you call that realtor who, you keep it, it's right there in the database. I mean, we put it right in the, if anyone who uses Encompass or a similar system, you have to put in the realtor information into the forms anyway. So
Yep.
You know exactly who it was. I mean, you should remember it or keep your own database, of course. But even if you don't, the system will capture the data for you. Just call the realtor, say, "Hey, did you know that Jonas over in Boynton Beach is thinking about moving? You might want to go over there and see if you could list his house, because a listing is gold to a realtor. A buyer is great. Again, speaking of having been a realtor for over 10 years, buyers are wonderful, right? Buyers are a bonus to your income. But if you're a good realtor, if you've been in the business more than 2 or 3 years, any realtor who's been doing it for that long, it's all about listings. I used to work with a guy in New York named Greg Young. He ran a group called Broker Heaven. And one of his axioms was those who list last, right? What that means is that people, if you want to be a realtor and be successful at it, you got to get into the listing side of the business, right? Which for us as loan officers, I think we automatically default to saying, oh, I want to know who does all the buy sides in my town. Well, that's good. That's great. It's good to know the buy side realtors. The reality is the buy side people are often the newbies, right? Because the really experienced folks are going to take their listing, they're going to put it on the MLS, they're going to do their marketing, and obviously they're going to try to sell it on their own directly. But the reality is that they're going to let those new folks, drive those buyers around for weeks or months or whatever it takes to find the house and then land on their listing and sell it. That's the reality. Getting involved with the listing agents from the mortgage side makes all the difference. You're getting to know the premium realtors in your market. And one of the things that I do is every deal that I get, and I instruct my LOs to do this too, immediately, the first time you look at the contract, you figure out who the listing agent is, give them a call. Call that listing agent and tell them who you are, why you're a good loan officer, and what you're going to get done for them. Just tell them that. Just introduce it, and they're often shocked. They're like, "Wait, why are you calling me? I don't have a buyer. Who are you?" And you tell them what you're doing. I'm calling because I'm going to be in this transaction with you, and I want you to know who I am, and this is my cell phone number, and call me or text me. They love it.
Yeah, I love that attitude. So it's obvious why you're successful in having a good year right now. I think a lot of folks are afraid to pick up the phone because they've just been sitting around and getting tons of deals falling in their lap over the last couple of years, right? And I think you're seeing a lot of that, especially direct consumer shops and stuff like that.
Could be that never happened to me because I started out, at a big company on a team that mostly did purchases. And, for my first year, I worked with nothing but sub 600 credit people. And I did $14 million in sub 600 credit loans in the first year. And maybe that's what it is the grounding of, I don't expect any refis to come in. I never did. Even when rates were in the threes, I wasn't really looking for refis. I was looking for purchases.
That's amazing. Well, Chris, I'm super impressed. I'll show you the level of ignorance that, I'm in this industry. I just bought a home recently here in DC. I'm going to show you the level of ignorance that still exists for even folks that are in the industry, right? I got an old house, and I've been speaking with folks that do renovations. I've been speaking with folks that do knockdowns and new builds. And I've got a couple different options for this house, and I locked the rate right before rates went up earlier this year when I bought. And I am ignorant in that you were talking about this construction loan option that you offer, and I'm ignorant to know whether or not do I keep the rate that I had before. And I'm fine telling everybody who's listening, knowing that I don't even know that these options exist. And do I keep that rate that I had before? And how does the actual new construction happen? Because it's basically doubling the cost that I paid to buy the home, right? If you think about that, right? So how does that actually work? How can you just tell me a little bit more of my own curiosity?
So there's a difference between a tear down and build new on the same lot and a brand new, construction on virgin ground. Those are going to be two different things. We do have a product for tear down and rebuild. That's a much more complicated. That's a much more complicated deal. But in terms of a new, brand new build on a new lot, never been developed, that's we try to make that almost as simple as buying a resale. So.
Interesting. Well, I appreciate that, Chris. Look, I really enjoyed this conversation. I'd like to get your address after we stop recording. I'm going to send you a T-shirt. Cool. Thank you for joining us today. And if you got any message for everybody, we got executives at companies, and we got lots of brokers and loan officers that listen. Do you have any message for anybody? Maybe anybody particular in the Florida market you might want to talk to?
My message would be to look at the niche products that you can offer and see if you can distinguish yourself in that way. Construction, renovation, reverse mortgages, those are all places that, you're not going to get edged out by the market forces. There's nothing we can do to stop the flow of cash buyers from coming in. There's nothing that we can do from our end to control the interest rates, right? That's just a fact of life. And you can either sit back and cry about how you lost your refi business, or you can go out and you can, be a beast and take new ground by going strongly into the purchase market, right? And just think about the basic things that put yourself in the shoes of the consumer, right? If you're going to buy a house, do you want a new house or an old house? Most people would rather have a new house. If you're going to, if you're an older person and you have the opportunity to buy a house and have payments for the rest of your life or no payments, what would you prefer? Probably no payments, right? So, I mean, here's just some ways to look at it. Don't look at it at, I need to do this and I want to sell, I want to sell an FHA loan because I make an extra 20 BPs on it. That's really not serving anybody. Any possible business coming in the door right now is good business, right? Don't worry about how bad their credit score is. You can get it up, right? If you don't know how to do it yourself, find a good partner who knows how to work people's credit. It's not that difficult.
Chris, that's awesome advice. I love that close right there. Thank you so much for joining us, and take care. We'll have you back on pretty soon because you got a lot to share. I really enjoyed this. Thank you.
Thank you.
Thanks for listening. If you like the podcast, please give us a 5-star rating, subscribe, and tell all your friends about the show. We at Sales Boomerang started this podcast to elevate the mortgage lending industry by sharing the kind of exclusive, insider knowledge from the successes and failures of the best of the best. The foundation of every successful lender is borrower retention. Sales Boomerang is the #1 fully automated borrower retention system in the industry. 1 in 2 of the biggest lending companies in the United States use Sales Boomerang to make sure they reach out to their borrowers when they need a loan, and more importantly, before their competitors do. If you want to learn more about Sales Boomerang, check us out at salesboomerang.com.